right. Good morning, everybody. Happy Wednesday. Happy Valentine's Day. Welcome to the morning show, Stock Market TV. You know the drill by now. If you're watching on YouTube, hit the like button, please and thank you. Today we're joined by Jason Perz from Against All Odds Research. He'll be on at 9. We'll have Mornings with Mary at 9:30. How's my volume? I'll turn myself up a little bit. Check 1, 2. Okay, we sound good. Good enough. Let's bring on Steve. Let's bring on JC. Let's roll.
Hey, now, Sell Puts Naked. I like the shirt there, Strazza. We got a little breakfast sandwich, little 8:30 Perlman program croissant, egg and cheese.
It was a croquette. Close though.
Right.
Happy birthday.
Thank you. Thank you. Appreciate it.
Happy Valentine's Day. Happy Valentine's Day, boys.
Yeah, man. Going to Philly tonight. Heat play the Sixers tonight. What are the chances of that?
Not good.
Right? So how can we not go? So I have a great wife, and she's like, all right, let's roll. She went with me to Madison Square Garden the other day for the Heat-Knicks game. So she's down for the get down.
She doesn't hate sports.
No, her brother played football forever. She was a cheerleader even through college.
Yeah.
She's more there for the socializing than she is for the actual athleticism. Like when we went to the Dolphins Jets game, we got hooked up with whatever suite, like the bougie part of the stadium. One of my buddies hooked it up, and we walk in, and Morgan's like, "Oh yeah, oh this is for me. This is how to do it." I was like, "Oh, is it? Okay." It was like a bar mitzvah and a football game broke out. You know what I mean?
A lot of things in sports these days are more about the event and all the ancillary fun, not the game itself. I mean, Super Bowl's the best example of that, ever.
That's right. And by the way, as much as I make fun of my wife for enjoying the bar mitzvah that turned into, that where a football game broke out, the food was pretty awesome. The food was pretty fantastic. Eating some churrasco with chimichurri. My breath was terrible after that game.
So Sam said Sixers by 20.
Yeah, maybe, whatever. It's February. The season doesn't start till the playoffs get going later. The Knicks fans don't know anything about that. I think I'm crazy. Yeah. I was dreaming about being back at the Charleston last night, like in the middle of the night. I'm just like dreaming of like looking through the wine list, like the
Oh no.
Ruh-roh.
Every now and then, because
wait, he's back.
We're back. Yeah.
I was just gonna say, every now and then I hear from you after a meal, and you're so excited. So the time before this was it Bobby Vance?
I doubt it.
No, it was some
Del Frisco's. I hadn't been to Del Frisco's in a minute.
You had a Del Frisco's moment a few months ago where you were like, oh, wow. And the Charleston, this was a big one for you.
This was a big one. And I already loved Baltimore. Now I love Baltimore even more. Shout out to Brett the Threat for taking me to the Charleston. Sorry, Azumi. You're number 2 now. Sorry. Can we talk about the market? I hear it's a bull market.
You got a bit of an early birthday present yesterday.
Yeah, no follow through, Spencer. Relax.
Hey,
what was my birthday present yesterday?
I'm just talking about the events of yesterday, and
what happened yesterday, Spencer?
The market didn't go up, or so I'm told.
Market's been going down all year. Not sure if you've counted.
Right.
Yeah. All right. Let's talk about it.
All right. All right, let's see what the market is doing this morning. Dow futures up 100 points on the Dow, getting back a little fraction of what they gave up yesterday. S&P futures up 23 handles, about 50 basis points. NASDAQ futures about the same, 100 points on the NASDAQ futures. Bond futures pretty much flat, not picking up what the stock market is putting down. Silver flat on the day, copper flat, gold flat. Oil up 60 basis points. Natural gas down again. I want to talk about that because, wow, natural gas.
Just quite the move. But
Wow.
if you followed natural gas for any extended period of time at all, it shouldn't shock you. This is what Natty does.
They call it the Widowmaker for a reason, right? So dollar mix this morning pretty much flat. Volatility index down back below 15. Funny saying back below 15. And U.S. 10-year yield hanging in there just fine, right at 4.3%. My understanding is that the stock market rally is fueled by expectations of lower rates, which I find hilarious as the U.S. 10-year yield breaks out to new multi-month highs. Now, of course, in the old funny money, quite the move happening in the funny money. Lots of profits being had for investors in fake internet money. Here we're looking at, let's see, the Bitcoin up 2,000 points today, back above 50, hanging in there around 52,000. That 47, 48,000, that was resistance. Looks like support now. Ethereum up 110 points, putting up some serious sticks this week. Strazza, Ethereum 2750, and of course Solana, which doesn't seem to care at all what the United States dollar is doing. Very impressive, up another 4.5% today, 117 bucks there on the Solana. Total crypto market cap, new high, Strazza, 1.87 trillion, which is the highest crypto market cap in, wait for it, since April of 22.
So we talked about this last week, Crypto Friday, I guess, right? Yeah. Where it's all about these little holding patterns, these little consolidations that began back in December or November, depending on the currency or the token, right? So like Ethereum breaking back out to new highs. I think that's solid confirmation, right, for the new highs in Bitcoin too. Those two looking pretty similar here, taking out the January highs. Solana still hasn't taken out its December 25th high, Christmas. But it's right there, right? And that's what you see when you look beneath the surface in the strongest altcoins. They're starting to go, and we are getting some pretty clear resolutions from these little multi-month coils, at least from the leaders, and that's how it always happens, right? The leaders go first, so we're getting that. We're there.
It's really impressive, really impressive. We always talk about this when certain things happen in the market. Like we always say, like, tell me what like bonds are doing, tell me what futures are doing, tell me what copper's doing, and I could pretty much tell you what the rest of the market is doing with like a few things. It's those assumptions where like if this is happening, then that should be happening. When that's not happening, that stands out to me.
If someone gave you a basket of intermarket information and left out cryptos right now, you would think they're probably falling.
Yeah. Mm-hmm.
But
no question, which is the point, right? When the market doesn't do what it quote unquote is supposed to do, that really stands out to me. And what's happening in crypto is exactly that. As the stock market was rising this year, the dollar was rising with it too. And I trust the dollar a lot more than I trust journalists. Plus I can count, and I know that the majority of stocks are falling all year. So if the stock market was so strong, would the dollar have been so strong also? No, right? So, that's another good example.
I think at least for now, though, at the index level, Bitcoin has been the right signal, right? Like throw up the chart, Fonz.
Is it so much of a signal as it is just treat it like its own thing? Is it a signal?
For me, it's risk appetite. It's as risk on as it gets. No, do the other one first, then we'll do this.
It's certainly not risk aversion.
Do the divergences.
It's certainly not evidence of risk aversion.
S&P 500 So look, all of these things, right? You're making a list. All these divergences, AD line, dollar, discretionary staples, bonds would suggest stocks probably should be making at least lower highs, right? Not ripping the new highs like every other day. But they've
but I don't know if you've counted, Strazza, most stocks are making lower highs.
Yeah, it doesn't matter. I'm talking about the S&P 500. How many times have we talked about it?
It does matter. It's a market of stocks.
For purposes, the point that I'm making, again, S&P 500 is the market to most people. That's the market that matters to them.
Well, good. Most people lose money, so that makes sense.
So anyway, all of these things would tell you proceed with caution for equities, right? But I think they've been wrong. Look at the Bitcoin. Bitcoin's been right. It's kept you on the right side. We can't, debate every day whether stocks are going up or not based on.
There's nothing to debate. We could just count. We have the data. It's not a debate.
But I'm just using the S&P 500 because that's normal, right? And that's what is applicable to most people.
Oh, got it. So if people are jumping off a bridge, we should do that too.
Listen, you can use.
Did the pretty lady on the TV tell you the stock market was all-time high, Strazza?
Listen, you can make
does she have a nice dress on?
You can make up your own benchmark and use it. But if 99.99% of other market participants are using another one and you're not, I mean, what's the point?
All right. Point taken. I think it's a dumb one, but point taken. All right. So why don't we talk about the only safe haven in town? No debates here, right, Strazza? No debates. Only safe haven in town. U.S. dollar?
Yeah, I guess.
Because you could say bills, but bills don't change price. That's the thing. So there's nothing there for you, right?
Yeah,
yes, you can go to bills, right? We know that. So that's a safe lady. That's a safe lady. That's a safe haven too, right? But in terms of price movement, what we can actually analyze is a flight to safety. The U.S. dollar new 3-month highs. What does that mean to you, Strazza? Doesn't matter?
It hasn't mattered.
It hasn't mattered. So
eventually,
so the advanced decline line on the New York Stock Exchange peaking the exact same day that the dollar bottomed is just a coincidence, right? That's just a coincidence.
I mean, throw that chart back up if you really want.
Hold on, the Russell 2000 peaking the day that the dollar bottomed. That's just a coincidence too. How about the Treasury bond market peaking the day the dollar bottomed? All of those are just a coincidence.
I mean, you're talking about the second pane here, and you're talking about that peak 3 peaks ago.
The day that the dollar bottomed on December the 27th, did the bond market not peak that day? Did small caps not peak that day? Did the advanced decline line in the world's most important stock exchange not peak that day?
Okay, so
are you going to come out here in public
fine.
and
Good
say
exercise.
that's just a coincidence?
Good exercise, JC. So December 27th, you're talking about all these peaks. If you shorted those peaks, have you made really any money at all, or are these things mostly sideways?
Shorted what?
Like the Russell 2000. You're talking about this big peak. Look at the Russell 2000. We're in the same place. We're still in the same place.
So then why don't we throw up slide 7, Spencer? Because I've been told over the last several days how small cap breath is improving, JC. Small cap breath is improving. Let me tell you something. Small cap breath was improving so much that of all the sectors in small caps, all the sectors that are improving, only one of them managed to make a new high. Only one. That's how much improvement we saw in breath. And look what this poor bastard looks like now. This thing was down 4% yesterday. This is small cap breath improvement? What kind of serial killer looks at this data and comes to that conclusion?
Yeah, it's an ugly stick. Listen.
Yeah. And by the way, and you will agree with me on this, the industrials are the generals. It's not tech. Industrials are the generals.
Yeah.
Industrials have been the leaders. Industrials are the ones most highly correlated with equities. If you lose the generals, if you lose industrials, see ya.
So really encouraging price action late in the day yesterday. A lot of these things clawed back a lot of the losses, closed with some large lower wicks. If you look at like large cap industrials, XLI, trading right back, at those all-time highs today. You didn't get any follow through. So, I mean, as ugly as yesterday's candle was,
what does that mean? We didn't get any. What does that mean? We didn't get any follow through.
The market's up today.
Market hasn't opened yet.
The market's up today, and cryptos. I mean, if you were up at 5 a.m., 4 a.m. This morning, crypto's kind of.
You're going to come out here and tell me that there's been no follow through from yesterday before the stock, 45 minutes before the stock market even opens. Is that are you really going to say that?
I mean, not yet. If we ended the day today, right here,
the day hasn't fucking started yet.
Yeah. So if we ended the day before we began the day, so right now, no follow through.
Yeah, great. Yeah, all right.
Follow through is the point. Like, I was getting kind of bear excited, I'm really trying here. Russell was on pace to have like his worst day since Q1 or Q2 of 2020. And it kind of climbed back late in the day and now higher here today. So
let's go back
to action.
Yeah. Let's definitely make conclusions about the stock market before it even opens today.
Let's not make conclusions about one day of price action either then.
Who is?
You're talking about
who's making conclusions about one day?
Cap industrials.
Yeah, small cap industrials were the only sector in small caps to make a new high, and Matumbo just went, bah, get out of here.
But is it a Mutombo if there's no follow through? Do you need follow through today? Will you be talking this way tomorrow if there is no follow through today? Like, will that candle
in which way am I talking about? Market breadth deterioration all year? Yesterday didn't change that.
It's called PSCI a Mutombo. So I'm saying, is it a Mutombo if we're green today?
I mean, it's pretty Mutombo-ish. Did you see what happened yesterday?
I think it gets unmutomboed if we close green today. Yeah.
Unmutomboed. Yeah. Dude, it was a 4% stick yesterday. If small cap industrials rally 4% today, man, that would be unmutomboed. Deal.
So it was the worst day since September of last year. I mean, this is a small cap sector index.
Yeah, but it was the only one that made a new high, is my point. Like, if this is your bullish thesis, for not you specifically, but just generally, if your bullish thesis for small caps is that the industrials are breaking out and they just got Mutomboed, like that's no good. But I don't have a bullish thesis for small caps, so I'm cool with it. It's not surprising to me. Hold on, I got something for you, Strazza. Can you throw up slide 9?
Yeah.
So these are the percentage of stocks above their 50-day and percentage of stocks above their 200-day in the S&P 500, which according to Strazza is like, the one everybody looks at. So great. So let's look at the stocks in the index that Strazza is telling me is the one that everybody looks at. And by the way, there's nothing magical about 50 or 200. Like, it could be the 69-day moving average or the 123-day moving average or whatever. You're going to get the same data. Fewer stocks have been going up all year. Right? Pick your favorite, right? So new highs in the index, sure, but it's a market of stocks, and the majority of stocks have been falling since the dollar bottomed. Probably not a coincidence. Now, let me take you back, Strazza, 4 years. Go to the next one, Mr. Spencer. Doesn't it look awfully familiar to this?
Oh, God.
Oh, God. Here we go.
I don't know.
Go back, Strazza. Go to the current one.
God.
Ready? And now go to right before COVID crash.
You are really something. You are really something, man.
Am I really something?
What do you want me to say to this?
Wait, JC, just to be clear,
is JC telling us that a new pandemic is coming?
That's what I was about to say.
First of all, if you recall, Spencer wasn't around, but Strazza was. If you recall, when we were short stocks in this period, we knew nothing about pandemics. I probably know less about viruses now than I did then.
You turned bearish, I think, November, December 19. You were talking about.
No, it was January. Was
it? I thought it was December.
You were talking about. It was like mid-January. Because remember, regional banks. Regional banks peaked in December and then started making new all-time relative lows in January. So did transports, by the way.
Wasn't there something with bonds too? No.
Well, we bought bonds. Well, so here's a great point. I'm glad you brought this up.
Great. Yeah.
I think I was short Google, but for the most part, the majority of my positions were long bonds. So in my opinion, at the time, which turned out to be correct, the easier trade was just to buy treasury bonds, not short stocks. I shorted Google too, but it was mostly the treasury bonds. This market isn't like that. Stocks and bonds are moving together. Like yesterday, stocks got the crap kicked out of them. So did bonds. Bonds are not a safe haven. They haven't been, right? They've been moving with stocks for 2 years. Yeah. So while that other time, the one that Strazza says, oh God, that other time, stocks and bonds were inversely correlated. It was a different cycle. In this case, stocks and bonds are moving together. The dollar is the only safe haven. You're not going to argue with me on that one, right?
No, but we talk about this a lot. This goes back to
by the way, you're telling me how great stocks are doing. How are bonds doing this morning?
I don't know. I don't own bonds. I'm really not too concerned, but I do know that credit spreads.
Nobody said you have to be concerned. You are agreeing with me. Hold on. You are agreeing with me that stocks and bonds are moving together. Are you not? Or are you going to disagree? Are stocks and bonds not moving together?
Yeah,
okay,
sure.
So in this market that's so strong today, how come bonds are not up? How come bonds are down?
Listen, you want me to tell you that stocks and bonds are moving together?
I don't want you to do anything. I'm asking you the question. Are they not?
But now we need to asterisk everything because you picked like a new way to measure stocks, right? So when I think stocks,
what new way? Explain to me which new way I'm measuring stocks.
I'm trying to measure how the stock market is doing based on market internals rather than just the price of the S&P 500.
I've always done. For the record, I've always done that.
All right. I'm trying.
Do you remember in October when you were arguing with me about how terrible the market looked, and I kept telling you that stocks keep going up and not making new lows? What were we doing there? We're doing the exact same thing we're doing now, are we not?
That was October.
It is a market of stocks, is it not?
Listen,
is a market of stocks, is it not?
You're saying that stocks and bonds are moving together. The S&P 500 this year does not look like Treasury.
That's right. That's my fucking point.
Okay. Right.
The bond market looks like most stocks.
Something has to be wrong here. Something.
Yeah.
But we don't know. Not wrong. It's not that it's wrong. It's just math. What's driving the indexes higher is not most stocks.
Here's the real answer is if you look at any of these.
What?
The real answer is if you look at any of these equally weighted indexes that we like to call like the best representation of the broader market or the median or the average.
Who's we? I don't think.
Right, I
don't think equally weighted indexes are the best representation of the market.
Okay, so value line geometric, Russell 2000, equally weighted Russell 1000. These indexes tend to look a lot like the average stock, right?
And the median stock's been going down all year. Since when? Since the dollar bottomed. Probably just a coincidence.
Right. So if you pull up any of these charts that I'm mentioning, you could say it's lower because yes, technically we are at a lower price today than we were at the December.
Like mathematically.
But it's a range. It's really sideways. It's really just trendless, right? Like if you look at Russell 2000, it's just sideways. It's not like these things are getting, killed out.
All right. Well, I guess we'll see what happens.
All right. I have a question for you when we are ready to move on from this.
I just said, we'll see. Let them dance. We'll see what happens. You trust a pretty journalist with the nice dress on and the guy that puts on an expensive tie to read Twitter to your parents and you trust that stuff. I trust the bond market.
That's just all right. What do you think about credit spreads? I'm not hearing anything about credit spreads.
I think he's looking at charts.
Oh, you're not hearing anything about credit spreads. It's because credit spreads aren't making new highs, right? Credit spreads are right. They're not tightening, they're widening.
Steve,
credit spreads made a new low yesterday.
Steve, what do you have?
Count again.
That you wanted to say.
Look at HYG IEI. It was up yesterday.
Nope. Count again.
Spencer? Okay.
You're wrong. What do you want me to tell you? It's not my opinion. The statement you just made is incorrect. So it's not my opinion. It's just wrong. So stop spreading fake news.
So you're saying, yes. So HYG IEI did close negative 0.01%. All right. You're right. So it flipped red, I guess, into the close. It was
let them dance, Strazza. Let them dance. I trust the bond market. I'm dancing with the date that brung me. That's it. It's not a big deal.
What's the most important information from the bond market for you? Like if credit spreads are saying one thing, which right now credit spreads are saying everything's fine.
Are they?
Right?
Okay.
Can we get the chart? I got a chart right here. We'll throw it up because we chart it didn't happen. That's what we say around here. So credit spreads kind of broke out in the base, and then you're talking about treasury bonds. What one do you weigh more importantly, like these new lows and something like TLT, or the fact that HYG IEI has resolved this base, looks good, making new highs, credit spreads making new lows?
Yeah, I think if the indexes themselves start to sell off, you're going to see credit spreads widening.
Yeah, but they're not right now. So I'm saying, what do you?
The indexes made a new all-time high like 2 days ago.
So would the indexes need to do what for credit spreads to start widening?
If the indexes come off, my suspicion is the credit spreads will widen. I guess we'll see.
What's that have to do with the indexes? How the indexes
again,
matter.
ready? If the indexes, S&P, NASDAQ, and the Dow start to sell off, in my opinion, credit spreads will widen.
So the indexes or stocks?
Indexes.
You're talking about the indexes.
Yeah, that's what I think will happen. I guess we'll see. I got a question for you.
Ready?
Throw
up the HYGII.
Oh my God. Here we go. We all know what it looks like. We all know what it looks like. It's not going up.
Nobody knows what
it's not going up. Are we throwing it up, Spencer? Because I want to move on to something else.
Yeah.
All right, great. That's right. So if the indexes start to sell off, my suspicion is this line will go down too. All right, moving right along. Let's talk about the 60-40 portfolio, because this is I want to hear your thoughts on this one, Strazza. So 60-40 stocks and bonds, right? Old school strategy, whatever. That was really helpful when bonds were inversely correlated with equities, right? 60-40 portfolio, right? So if stocks are selling off, then you're getting helps with the bond market, right? I guess that's the theory. To me, it's always been stupid, but that's the theory,
the assumption around that stock bonds relationship is why 60-40 even exists, right?
It's because they weren't positively correlated, is what you're saying.
Yeah, that's how it was designed to work. Right. When one's not doing well, the other one helps you out. Now it's changed.
So now that stocks and bonds have been positively correlated, that 60-40 portfolio is more like just 100, right? Would you agree with that?
Sorry, I was reading the chat. Say it again.
Stocks and bonds, positively correlated. So if you're in 60% stocks, 40% bonds, you're really just at 100 because they're moving together, right?
I mean, didn't the 60-40 portfolio have its worst year ever in 2022?
Maybe. I think it's always been dumb. Not the point. Isn't the new 60-40 portfolio stocks and energy, stocks and oil more specifically? Doesn't that make a lot more sense in this environment, this cycle? Can you throw up the chart of the this is the ratio between the two?
Yeah, you know what the problem is with this? Why this would never be a thing? And I know, like, this wouldn't matter to us, but
humans
on Wall Street, it's the volatility of oil. This will never be a thing. It's too volatile. People, it wouldn't work.
I agree 100%. It's never going to be a thing. Totally with you on that. Look at me and Strazza agreeing so much. Totally agree with you.
And I'm not saying that's the right answer, because I like where your head's at.
Right. I figured you would. I figured you would.
Yeah.
So it's never going to be a thing. Financial advisors are never going to be able to wrap their heads around this. Agreed wholeheartedly.
You can't sell it.
But not the point. We live in reality, not like in this like fugazi world. So in reality, this makes sense, right?
Hey, if you told me this is what you're doing right now, I would say, okay, yeah, I see that. Sure.
So long oil, short S&Ps is a trade that you don't hate.
No.
Now, there's a big difference between not hating something and actually liking something.
I think you need to stop, though, on this somewhere.
Yeah.
As you do with anything, you want to manage this, because if it goes in the other direction, and it's going to have a lot to do with the bond market, inflation expectations, all that jazz, and things are really moving right now. Rates are ticking higher. The Fed's talking a lot, and that's going to matter for how energy does.
So the stop is last year's lows. Obs.
Yeah, you have range lows in most energy assets, which is why I really like taking a shot here. Because if you're buying against the range lows, you're basically just making a bet. Energy plays catch up or catches some sort of rotational tailwind, and you know exactly where you're out, and you should be out with a small loss if you pick the right vehicle.
If the bond market continues to get the crap kicked out of it, this line goes up?
Yeah. So what you're saying, lower bonds, higher interest rates, typically higher oil prices. I'm with you. But again, you need a tight stop.
This cycle. I'm only interested in this cycle because these people with their back tests, all your fucking back tests, none of them include this cycle's data, and this cycle is the only one that matters.
Yeah, and the other thing too is, we talk about sentiment, and nobody wants to be in a crowded trade. This is not a crowded trade right now. And if you zoom out enough,
I don't know anybody in this trade.
Nobody. If you zoom out enough,
this is the loneliest trade in the market.
Right. Everyone has forgot about energy. Zoom out. Remember 2020. Remember 21. Look at the primary trend. The way that these energy assets came off the lows in 2020, the primary trend is higher, right? So I think when this range finally does resolve, it resolves in the direction of the underlying trend, and we're going higher again. And everybody's going to love energy, and then it will become a popular trade and a crowded trade eventually.
I think so.
It's not right now. And, it's tough for energy. We'll see. We're not talking about tech stocks here. This is harder for people.
So you like this trade. You think bonds go lower, you think rates go up, and you think stocks do what in that environment?
I would need more information.
Oh, of course you do. How convenient.
Need more information. Rates go up, How much? How fast?
How convenient.
How high?
Is Jason ready? Can we bring somebody intelligent on here to talk about markets?
On that note, let's bring on Jason Perz.
Jason will talk about energy with.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Jason, what's up, man?
Hey guys, how are you?
We're doing all right.
Been listening to the show already.
What do you think? What do you think? Who's right, me or Strazza?
Obviously nobody, because you're right about one part of it, which is the part where we go, okay, well, what about rates? And then there's the oil. So I can say the same thing for me is that I have all these signals too. I have the signals to get long heating oil. I have the signals to get long gasoline. We are long these things. Heating oil especially, it's just raging. But at the same time, it's the conversation that needs to be had. What exactly is going on with energy?
Can I stop you right there for 1 second? Heating oil, correct me if I'm wrong, Strazza, has been pretty leading in both directions for some time. Jason, have you in like the energy complex? Have you found that as well, Jason?
Yeah. So it's kind of a leader most of the time, but it's the most risk on part of that market. It's the same thing you guys are talking about when you're talking about crypto. Yes.
Is that true?
Yes.
I didn't realize
more than gasoline.
Yes, more than gasoline. I believe that it's the most risk on part of that market. So most of the time when you see heating oil moving like crazy, that's something that can tell you that the energy market could also move. But at the same time, I like the conversation where you guys were going with rates. You know, when we're talking about yields, where exactly are yields going if energy is going up and yields are supposedly possibly coming down? You know, that's the conversation.
Right.
Yields are not going down. Yields are making new multi-month highs.
Exactly. So at the moment, yields continue to make multi-month highs. We're looking at energy. Like the thing that I'm seeing more than anything else is that we're seeing commercial data going two different ways. So we're seeing commercial data telling us that bonds could go up. We're also seeing commercial data telling us that oil could go up. Okay. But at the same time, what really matters? The price. So right now, we got long bonds probably a month ago. That just got stopped out very recently. And so now we're kind of looking at it and going, okay, well, maybe the energy trade that we also have all these signals for is finally taking off. So I really think it's taking off at the moment. And if we can continue to kind of see this rotation into energy, the equities will start moving. But to make sure this isn't a false signal, I also really want to see that the equities start to move with it. That's the problem we're having right now. We're just seeing the equities. They look dead.
Yeah,
I know.
Like, so that's why when I talk about like the new 60-40 portfolio, like I say, like tongue in cheek, but like kind of serious, you know, it's not XLE, it's not XOM, it's USO or CL, right? It's the commodity, and and it'll never happen. Strazza is right. It'll never happen. Financial advisors will never wrap their heads around this, and by the time they do, it's going to be too late, right? That's why they're financial advisors, right?
Yeah, for sure. I mean, that's the problem that we're all running into is, you know, you can't, number one, every strategy is not going to work all the time. If you're doing a 60-40, and you know, just as I know, that's the thing that they throw down everybody's throats. Buy the 60-40 portfolio. It's good all the time. It's like, of course it isn't. There's no such strategy that's great all the time. But what is a good strategy for traders, and commodities are great trading vehicles, is using the commodities as trading vehicles. For trading vehicles, you can't just say, hey, I'm going to buy oil and just hold it for the next 30 years. You probably get your face ripped off at some point. But you can come in and you can be a trend following trader. You could be a trader in general. You could diversify your portfolio by not just trading the stocks, but also trading the commodities as well. There's so many ETFs and products to trade these things these days. I mean, you could trade these things in many different ways. The only thing that's not out there in an ETF is heating oil.
I think it might be like a really illiquid one, right? Like,
I don't know. I've never seen it.
Yeah, there's a reason why you never seen it. I think because it doesn't trade. But the gasoline does. The UGA does, doesn't it?
Yes, UGA is actually a good one. That's one that a lot of people use. USO actually was crappy, but now that's a lot better. But once again, it's like if you have access to the futures market too, you basically have these micro crude oil futures now. You know, basically there's all these cheaper options these days that they're trying to make futures more available for the retail trader. So basically there are lots of different ways to trade these things. But at the moment, yeah, in the ETF land, you can get screwed also by trading some of these, but USO and UGA are good, pretty good products.
All right, hold on. Let's stick with this. Let's give the people what they want quick. Talk more about some vehicles. What are the preferred vehicles if you're looking to add exposure to energy here?
To energy,
Got to go commodity, Jason, right? You can't, no evidence of the stocks yet.
No, yeah, I wouldn't touch any of the equities at the moment. It's
not even like refiners, like none of them.
So, once again, it's like, what are you trying to trade? If you're a value trader, if you're a person who's trying to trade into the next, 5 years or something, or a couple years, yeah, I'm sure you could find something. For me, if I'm looking at it, I would rather wait for a breakout. I think energy, if you look at XLE, it's been stuck in this range forever. And if it finally breaks out of that range, it's really going to go sailing. And like you said earlier, you were talking about the fact that energy is just not loved right now. Like, nobody cares about it. Nobody's talking about it. And it's true. And even with all that, it's just hung out in this range. Basically, all of the underlying products, oil, gasoline, heating oil, like we've already talked about, are starting to move up. So, you have this trade kind of setting up. But, for me, like JC was talking about, I would use the actual products. I would use USO. I would use UGA. And I would kind of stay out of the equities until they make a new high. And also, if the commodities are going up, the equities will also follow.
Eventually, right? They can't just keep ignoring it forever.
Yes.
Tell them that. All right. What else is on your mind?
Nothing. I sent you guys some charts. Do you guys have some? Do you guys get those?
Yeah. I want to share something quickly with you guys. Because we're talking about how the commodity's doing well, but the stock not so much. But if you look at the XLE relative to the SPY, so this is the energy sector relative to the rest of the market. Here.
Wait, I thought you can't use the SPY for that. I thought that was just boring. I thought Steven did that earlier. That was terrible.
Use the SPY for what?
Just a broad benchmark.
JC's
Well, you could use anything you want. It's going to look better than the SPY. The reason I'm using the SPY is because it's the toughest benchmark because it's done so well. So look at slide 2, right? So like, you don't want to, like, if you say like you have a good, a good football team and they played like Eastern Michigan State, A&M, A&T, that's not a good barometer. If you're going to compare something, if you want to compare it to the BAS, which SPY obviously is better than the IWM or the, value line or whatever, compare it to the best. It does. I'm saying there's a chance is all I'm saying, right? Saying there's a chance.
Yeah.
Would you guys agree with that at least?
I don't love this because if you zoom out a little bit more, this thing just completed the top. So you need, it needs to undo that top.
No question.
Reclaim some of these pivot lows.
Question.
You know what I mean?
Yes.
Maybe it starts here, but a trend reversal pattern was just completed in this ratio.
Yep.
So work to do, but totally.
I think we all agree that it's got work to do. But if it's going to follow the commodity, like Jason is alluding to, and I have a hard time disagreeing with that, well, here you go.
Yeah.
No, I completely agree. Yeah, and relative strength charts, I'm just messing around, but relative strength charts are honestly probably the best thing to use for just about everything. If you're looking at something, you want to find a sector to get into, and you see relative strength in it, that's going to be the signal. So right now, XLE, we're not seeing any relative strength. And if we're not seeing any relative strength, there's no reason to get into it just yet. But if we start to see that break out to the upside, make higher highs, higher lows, and so on, absolutely, that's going to be the area you're going to want to be. And that's what we saw before it really took off back in 2020. So once again, it's like, I think it could happen, but we need to see the equities start to really move as well.
Throw up slide 11 real quick. So this is the energy stocks versus the overall market. And now this is crude oil itself relative to the overall market, which looks a lot better. Right?
Yes. And I love that.
If this continues to go up, the other one will too, right?
Yeah, I love that oops pattern that you guys do. That's something that I use in back testing also. Basically, if you have it and it goes out past it has to be past 40 days, about 40 days out, and that breaks down and then goes up after a retest, that's usually a very strong signal that trend is going to change. And so I could see that trend changing and then the equities having to follow it. But once again, they ran so much in a time where nothing was going up. 22, like energy was the only, what was it, the only sector that was actually up in 22? You know, so
I believe so.
I believe so, yeah.
yeah. So I mean, it
was.
really was the way to generate alpha for yourself after all that time and continue to create returns. But once again, it just topped out. It's continued to just consolidate. And if we see a breakout in XLE, yes, absolutely. But for now, USO, UGA, crude oil futures, whatever, however you want to play it, there's many ways to play that.
I want to talk about materials now, right? If energy starts working, is it, you know, a practical way to think to look to materials and say, well, we should expect these guys to start working now too? In other words, do all these commodity stocks have to work at the same time, or do we often see energy's working, you know, materials are not, maybe precious metals are, but you know, the rest of materials are not? Like, how's that?
I'd love to hear your thoughts, Jason. It's a great question.
No, I love that. Great question, because and you're absolutely right on the no. You know, just no. Of course, you could have. We just talked about this yesterday too, which is interesting. Remember 2018 optionsellers.com guy. He was like, oh, natural gas and oil. He's selling calls on natural gas. He's selling puts on oil going forward, and then he blows up the whole company basically. You know,
wasn't. Yeah, I remember that day. Like, I remember where I was when that.
Is this
thing
the guy
blew
that
up.
made a YouTube video crying?
Yes. You know,
Yes.
talking about, oh, John, your bread was great. Sorry, I lost your money. You know, like, I mean, that's rough.
What was that fun?
Yeah.
What was he trading though? Wasn't he trading some
it was natural gas. He was picking up pennies in front of the steamroller, and then the steamroller caught him.
It was natural gas selling naked calls on natural gas and selling naked puts on.
Okay, that's right. That's
right. So basically that guy blows up. But my point is that if you're looking at even inside the energy sector, you're also going to see things like that. So if you're going inside the energy sector alone, you're going to see divergences too. Commodities, there's all types of divergences. You know, right now the softs are doing great. You know, if you have cotton picking up, you have lumber looking okay. You know, sugar, cocoa, obviously everybody knows cocoa right now. But if you look at like the ag sector, it looks like crap. You know, like, so basically if you're going back and forth between these three things, you're basically going, oh, there's a lot of divergences. And then if you go into the sector wise for the stock market, you're looking at XLB, which is the materials. You're looking at XLI, which is the industrials. And as you're going through all of these, you can see major divergences depending on the regime. You're in a reflationary regime, most of the time you'll see industrials, materials, energy kind of move. If you're in this type of stagflationary regime, sometimes you can see energy moving and the rest of those not moving at all. Really, it just depends on what regime we're kind of in. And at the moment, it just seems like, and also the best thing to do with regimes is just forget about them and use the price action. When the price action starts to dictate that you should get into those trades, you should get into them. But right now, a lot of things are looking really good. I mean, industrials, look at the internals of the market. The internals of the market look great. It's the reason why I couldn't be bearish yesterday. You know, seeing the crash of the day, you know, like you just can't be bearish on it, you know, not yet.
Industrials continue to impress. And, you know, just to wrap up the materials conversation, on a year-to-date performance, the only subgroup in materials that's positive is building materials, and they're different.
They're industrials.
They're home builders, right? These things look just like home builders. They're moving with.
Oh, so you're saying they're more like discretionaries than industrials, but a lot of discretionaries look like industrials too. So that
right. They're moving with residential construction is the bottom line, not these other materials groups. And then, like, as you move on down this list, like silver down 24% this year, aluminum 17.5%, gold 17%, industrial metals and minerals 13.5%. Like, things are getting whacked out here in what, just a month and a half?
Copper making new multi-month lows, which is part of the reason that we've been bearish, right?
Copper down 10%.
Copper and bonds making new multi-month lows. You think the S&P is going to go higher with those making new lows?
I think anything's possible, but look at the way copper's been for a long time. Once again, you know, it's kind of like, okay, if we look at copper, we look at the way things have been for a long time. Everything has divergences. We always go Dr. Copper or intermarket analysis. And once again, intermarket analysis is great. I use it. I love it. However, at the same time, I see that things change all the time and correlations change all the time. As we all know, you know, right now, the dollar's really, really important these last few years. it wasn't always the most important thing to the stock market. Right now, if we're looking at tech, we're looking at the stock market and all these things together. It's like tech is the driver now. So as long as tech is kind of the driver, we could see very weird divergences as we have this major weighting pulling the market higher.
If I told you get one piece of intermarket evidence to help guide you, right? You could take the dollar, you could take rates, pick anything, discretionary, staples.
Depends on the environment. This cycle specifically.
Yeah. I want your answer too. Right now, I tell you for the rest of this year, you get one chart, intermarket evidence to help you. What do you guys take?
High beta, low vol.
I like that.
Jason?
CRB, USB. So that's
CRB.
CRB. So that's the CRB index, the commodities index against the 30-year bond. So basically, to me, that has been.
And what does that tell you?
That has been my go-to for years and has always kind of led me the right direction. Whether it's commodities, bonds, market direction, whatever it is, I could look at that and kind of understand exactly where I need to go across all assets.
I like that, Jason. I like that a lot.
Can the commodities bonds ratio guide you in the stock market?
Yes, absolutely. So if we're looking at the commodities starting to take over, we can start to say, okay, well, we want to be in areas that are commodity based and commodity related. If the bonds start to take over, which sometimes you'll see, especially around the peaks, like we've just seen recently in the market. So the market kind of turned around January, what was that, 23? January 23, we started to see breakouts in tech. And so basically that was the same time that index started to top. So it's kind of like, the ratio started to top, meaning bonds started to take over commodities just a little bit. So once again, it's like you can really kind of dissect everything from that across all assets, even currencies. Currencies you can kind of even understand because you understand commodity-based currencies. You understand things like the Canadian dollar, the New Zealand Kiwi, the Australian dollar. Yep. If you understand all those things, you can kind of go, okay, well, look at the commodities here. They're kind of telling us something. So it's a good one to definitely look at.
The Polish zloty.
The zloty. I haven't traded that one.
I haven't traded either, but I look at it every day. It's been a great indicator. Part of the reason we're buying stocks so aggressively in October was because the zloty was ripping. Emerging market currencies in general, but the zloty is a good benchmark for that, like Mexican peso or real or whatever. But the zloty's really clean, making new 3-month lows as we speak. Kind of just further evidence of dollar strength. Nothing we don't already know.
Nice.
Yeah, don't sleep on the zloty, Jason.
Don't sleep on the zloty. All right, I'm gonna write that on my wall. Something to keep in mind.
How many rate cuts this year?
So that's going to be the toughest one to understand. Now, once again, if we're just reading into it, what was crazy to me is that their statement changed so much from last year to this year. And so basically, if we're looking at that, I think everything's just subject to change. And also, like, I think they're seeing the same things that myself as a commodities trader is looking at, which is there's inflation under the surface everywhere. It's everywhere. Like if they backed off at all, it would go so much higher quickly. Now, once again, it's like it's a nicer story to talk about the rate cuts and the possibility of the rate cuts. But I think to get those rate cuts, we'd have to see some major problems. Something would have to happen with the banking system, the stock market, something. We'd have to see some major problems. And I think that could happen, sure. I'm not betting against that. I'm just saying that to see the rate cuts everybody wants to see, we'd have to see some pain.
Yeah.
What are you thinking about it?
I think that's the big wild card.
I don't think about it at all. I don't see a point. I honestly don't see a point in thinking about it.
I remember last year thinking to myself, looking at like the gasoline chart, some other commodity futures, and just thinking commodities could throw a wrench in this thing, right? If they start legging up from here, maybe the Fed wasn't planning on that. Shelter's moving higher. And I don't know too much about it. I think services was the one everybody was banking on falling, right? And driving the disinflation. And that was the big news Monday. It was like, oh, even services are ticking higher. I think that was really the spooker. So you're right. It's like everywhere now. That can, JC said the other day, and I kind of rolled my eyes, and then the show ended and I thought about it. Brett asked me how many cuts, and I forget what I said, like between 3 and 6. JC said, I think we got a hike. Can you imagine if they had to do more?
That would be awesome.
Now?
You've got all these Looney Tunes talking about Fed cuts, and the Fed just matumbos their whole idea there. That's why I don't think about it at all. Who gives a shit? The Fed doesn't think about me. Why should I think about them?
A lot of stuff would have to change for that scenario to play out. But I think it's that's the way you want to think about this, because this thing is moving around so much. From it was going to be 6 cuts, we were going to start in March. Now it's going to be 3 cuts. Now imagine if there's going to be 2 cuts. This thing's all over the place. So I don't think anybody really knows. But the market is certainly not priced for a resurgence in inflation.
For sure. And speaking of inflation, there's somebody who also talked about the lean hogs on here, which is just funny. That's great.
What's funny about the hogs? Tell me.
I love it because lean hogs, it's a great trade. We're long it. It's a great product. I just have never heard anybody talk about it in a live ever. So just shout out to Sam for bringing up lean hogs. That's funny. But once again,
what about the Zloty? Do you hear
Zloty? I see a lot of Zloty tattoos for an all-star team.
What would have to happen for you to get a Zloty tattoo, JC? The chat wants to know.
What would it take for me to get a Zloty tattoo? I can't think of anything. I can't think of anything that would have to happen. I mean, if the Dolphins win the Super Bowl next year, I'll get a Zloty tattoo. How about that?
Okay.
Deal?
What about the Miami Heat?
Shorty this, Spencer. Clip this.
The Miami Heat win championships all the time, so no big deal.
It's been a while.
It's been a few years.
Been a while. They're great though. Some years.
Maybe culture. It's the culture.
It's the culture.
Go Knicks.
Boo.
No, I said the market is not priced for an uptick in inflation. It also is not priced for 6 cuts. That was ridiculous too. That would not be a market environment that bulls would be happy in. So some of these guys coming out here and saying all this stuff about, the rate cuts and how we need lower rates, and that's what fueled the rally. JC alluded to it earlier. Be careful with those people, because there's a sweet spot in the middle, and you don't want to be too far on one side or the other. 6 cuts, that's not a good place.
Are we still talking about the Fed? Can we move on to something that matters?
Just kind of thinking out loud.
We have Jason Perz here, and we're sitting here talking about the fucking Fed. Come on, Jason, talk to us. What are we buying? We're buying lean hogs. I'm in. Let's go.
Lean hogs.
I like your energy situation. I can get down with that. What else we got?
So we do have cotton on the books. We do have a lot of commodities. I mean, that's the crazy thing when we're talking about it. So just to talk about a couple things, like commodities are doing well. It's very interesting to kind of see it, and it kind of goes with the idea that maybe we don't see any rate cuts. Maybe inflation gets out of control, or maybe it just spikes up and comes right back to earth. I have no idea. I just know that, hey, it's something you can run now. Hey, the trade's going well. Let's see where it ends up. But basically, to me, I think what's very interesting is that bonds are coming down. Commodities are moving up. What's that going to tell you about what happens in the future is very important. So, who cares about what the Fed's exactly going to do? But if you look at the rates and you look at the bonds themselves, we're seeing what commodities are doing, the pressure it's possibly putting on the bond market, and where that could all end up. So if we kind of just look at it that way and start there, I think commodities could be an interesting thing to play in 2024. And then also the commodity sectors could also be a very interesting to play in 2024 as well. So let's see where that ends up.
Bonds making new multi-month lows as we speak this morning. Strazza was looking for follow through. Well, there you go, Strazza. Bonds lower, commodities higher, right? That ratio of CRB to the ZBs.
Yep.
That makes a lot of
ZB
sense.
or USB is the one on stock charts. ZB is the futures contract. So, whatever you guys use, I saw somebody asked about that. So CRB is the commodities index. USB is the 30-year bond. So however you get that data.
Yeah, and all the tickers are different. Like for us, the CRB index is TRJ CRB. You know what I mean?
Yeah.
So it's like,
that's a weird one.
Yeah, it depends on, But at
It
the
all
end of the day,
changes.
yes.
Yep.
CRB, it all changes. Yep. CRB, when we make our own charting software, we're just going to confuse the hell out of everybody.
Just change it all up.
Yeah. I like it. I really like that a lot. All right, what else?
Crypto? You got anything on crypto?
Yeah, I'd love to hear your thoughts there.
Oh yeah. So the quick thought on crypto is that I liked what Steven was saying earlier. When you're looking at the crypto market and you're seeing it go up, most of the time, if the market is flat, you're going to see the stock market also go up with that as well. Go back to 2020, you have Bitcoin starts taking off as we're in this nasty range from what was that, September all the way till the election, basically. And Bitcoin continues to go up. And then the election happens and explodes higher. Another thing that's very interesting that I also heard from Almanac Trader, which was the fact that every election year with the January barometer, meaning that January was up, every election year has been up 100% of the time, which is quite interesting. So once again, I really see a lot of like, you know, the bullishness of Bitcoin telling me that the market's still in this risk on zone. The dollar moving up is something to fear and something to continue to watch. But if we continue to watch the dollar and it kind of just stops here and doesn't go much higher, and then Bitcoin continues to take off, that's really telling us we're in a risk-on
Which is a tough bet, Jason. Correct me if I'm wrong. It's a tough bet considering it just broke out to new 3-month highs. It's U.S. dollar index futures are up every week this year, 7 in a row now for this week.
It's a tough bet. Once again, it's a very tough bet. But also, it's like, why are commodities going up still? Then why? And unless it's the fear trade, which also happens in late cycle environments, which you have the fear trade, which is commodities start to go up, the dollar starts to spike with it, and then next thing you know, everything.
But that's
crashes.
my point. Haven't the dollar and energy been moving together for quite some time? It's not new.
Yes, but at the same time, every time that happens, all risk-on assets are moving down. So I've never seen it happen where you have Bitcoin moving up and tech moving up. So that's what I'm kind of looking at and going, okay, this is weird. And all of these correlations that we're talking about are incredibly important. And if we see the dollar break out, it has broken out, but continue to break out, or if the dollar breaks down, or if bonds go in one direction or the other, we're at a very interesting inflection point in the market. And this is where a lot of money can be made. You just have to be ready to take that whichever way it goes. Don't get wed to, oh, I need to go this way. Oh, I need to do this. Like, just get wed to the price broke down here, I'm going this way. The price broke out here, I'm going to go this way. And get wed to that idea, and you're going to make a lot of money.
Are you suggesting that something's got to give?
Something's going to go one way or the other. The dollar's either going to continue up, and we're going to see a lot of pain, or the dollar's going to start to go down, and things are going to change a bit. And not to mention right now, this time of the year, February, March, this is a very normal time for the market to kind of hang out in this zone, like just be consolidating, pullback, corrections. You know, this is very normal this time of year. So once again, it's like, always look at the seasonality, not because you want to trade seasonality. Look at the seasonality just so you can get it in your head that this needs to go this way or this needs to go that way. And that's it.
Yeah.
Yeah, like the summer months.
If the market wasn't a mess this time of year, that would be weird.
Yes, exactly. That's all I use seasonality for. I don't use it to put trades on. I just use it to go, oh well, no shit.
Yep, I'm with you on that.
That's good. All right, Jason Perz, man, always a pleasure.
Thank you, Jason.
Hey, thanks for having me on, guys. It's always fun.
We've got the link to Jason's research in the description. Check it out there. And great follow on Twitter, and he joins us on Spaces every Tuesday. If you missed that,
and check us out. We've been doing one on Fridays too.
Fridays at around 11 a.m. So we just been getting on Fridays, and a bunch of people. So it's been fun. So we'll keep doing this.
Cool,
chatting it up.
All right,
bro.
Thanks, Jason.
Check you later.
He's great. I like him.
Yeah, Jason is always a delight to talk to because he's a real trader. He's really in it. So he brings a unique perspective. Also, his commodities focus.
Yeah, I was going to say more the futures, right? Because we have a lot of traders that come here, but a lot of them are equity focused.
Yeah, it's Jason's doing a little bit differently. He's managing assets. He's focused on commodities. He loves his futures. So for me, like him and Ian are just two of the best people to talk to when it comes to commodities.
Yeah, it's great.
All right. We need to talk about this lift, earnings report from last.
I want to do all earnings. I don't want to miss earnings. We're missing earnings. Like,
we are missing?
What was it? Datadog?
We're missing a lot of them, Steve.
There's too many earnings.
Give it to me. Give me the ones that I actually need to know about.
All right. Real fast. Let's go. Bring up the calendar if we can. Let's start there. Just kind of get the lay of the land, and then I want to start with Lyft here last night. I wouldn't normally want to start with Lyft or frankly care about Lyft's earnings all that much, but last night was a first for me. I have followed a lot of earnings reports through the years. I've seen companies where their earnings reports leak during the day. I have seen earnings reports that have had to be restated later on. I have never seen a typo, a mistake in the earnings press release that caused the stock to spike up like 60%. And then they correct the mistake on the conference call and the stock comes crashing down. That's what happened last night. If you rock up slide 12 here, this is a screenshot from the release last night. Do we have slide 12?
Yeah. Some hungover kid in the Big Four is getting absolutely screamed at today, maybe fired. This was the auditor's fault. They're supposed to tick and tie these things and check for all these, little typos and shit like that. Somebody didn't do their job.
This is again from the release, the original release. We see this
500 base. So it went up 40%.
This is for their guidance. This is their forward-looking stuff here. We see EBITDA margin expansion of 500 basis points, 5% up year over year. No, actually, it was not 500 basis points. It was 50 basis points. They corrected that on the call.
This is really interesting, Spencer. This is good color. This is probably something the SEC wants to take a look at. I'm not saying foul play. I'm just saying with the after hours action and the way that this is a very human mistake, they probably want to at least find out how it happened and check some account activity.
Yes.
Just saying. Just saying. Crazy.
I agree with you, Steve. And yeah,
you're going to check to see if there were any shenanigans, is what you're saying.
That's all I'm saying.
And if you had to guess, there probably wasn't. It was just an innocent mistake.
Yeah.
It was probably honest and innocent, but they're going to look at it because there was, what was it, Spencer? 40% at the highs.
No, it was like 60%.
Yeah, they have to look at it.
Wow, it really moved that much.
Yeah.
I looked. This is Lyft.
And we have the chart. Wait, do we have the chart here? The after hours chart? Yeah, look at that. So, yes, whoever said in the chat, after hours, these are algos reading these releases automatically and trading off of them. So a lot of this is computers, but surely there are some people here that are pissed off this morning or pissed off last night, and
there'll be a class action.
There will be lawyers. There will be lawyers. Anyway, the stock settled in there.
Stock's up 28% today.
Well, okay, like on an absolute basis, that's what, like a couple bucks. But anyway,
28% on an absolute basis.
All right.
Yeah.
So Lyft had one decent earnings report. Let's all not get like crazy excited about this.
I know you have a man crush on Uber, but that's it's pushing up against new 52-week highs on Lyft. Just FYI. I don't know if there's like some kind of squeeze happening on the people that sold off. I don't know.
Then go buy Lyft.
I'm not buying Lyft. I'm just saying. You're hating on Lyft without it's 28% today. It's kind of a big deal.
I'll keep hating on Lyft. Here's the thing. Like, you know what Lyft is to Uber? Remember when we poo-pooed Spencer's take about Snapchat and Meta being comps? They are.
Wow.
We'll read an analyst report. They are comps.
It's that aggressive. It's a $6 billion company, Lyft, and Uber's 100 something, right?
Uber is 30 Lyfts. Yeah. You know what I mean? Uber is an ecosystem play. They have freight, delivery, ride hailing, right? They can make bets. They're a cash cow at this point. Lyft is playing a different game. They're trying to survive.
Stock's up 32%.
Yeah, great. It's a good start. Show some of my charts. No, I just want to make my point. Like, there's no contest here. Show the performance chart. Show the ratio chart. Nothing to talk about. So this is performance since inception. They both IPO'd in this, string of a couple months back in 2019. Uber has done very well. Lyft is down 85%. Here's another way to visualize the big winner in this space, which is clearly Uber. And trading at all-time highs out here. That'll change today with the move from Lyft, but the trend is very clearly up and to the right. So this favors more leadership from Uber.
Obligatory mention that there is supposed to be some kind of a Valentine's Day strike happening today for gig economy workers. So Uber drivers, Lyft drivers, DoorDash drivers who are not going to allegedly not to work on Valentine's Day as a protest happens there. Let's talk about Robin.
You know, Valentine's Day only second to Christmas in terms of card sales.
I believe,
you know, a lot of cards. You guys get cards for your ladies?
I get cards for my birthday.
JC's like, today is my day.
Today's my day. Valentine's Day is a scam anyway. It's like a Hallmark holiday.
Yeah.
You guys will go out to eat, though.
We're going to Philly and we're going to the basketball game.
You're not going to go out to dinner before or after?
I wanted to crash in Philly and come back in the morning, but I don't, you know, it's a dictatorship around here. I don't get many votes. Even on my birthday.
Do we have
Lyft is better than Uber.
Wait, well, let's bring up Robinhood here. Yeah, surprise beat.
Give me the numbers.
Profitable last quarter. They made 3 cents per share versus an estimate of a 1 cent per share loss. Sales also beat estimates, $471 versus $456 million. A lot of this was net interest income. And yeah, look at Robinhood up. What is it up this today?
14%.
Yeah.
Yep.
Listen, serious brand value here if they find a way to figure out
you think?
The business.
You really think so?
Yeah, just dude, it's the demographic.
Dude,
right?
This thing's flat for 2 years, bro.
Yeah, but look at this. So where are we right now? Exactly where these red arrows are. Let this thing settle. You know what I mean? But if you can get it in a nice coil on the upper bounds of this base, perfectly actionable. This is the level, right? If you wanted to buy this stock, this is the place to buy it. My thoughts on Robinhood are simple, and I kind of want to save this for Mary, but the bases that are most likely to resolve higher in the cleanest, least messy fashion are the ones that are also resolving bases or completing reversals on relative terms. Go look at Robinhood relative to anything. Give it an easy benchmark. Look at it relative to ARK. There's no relative strength there. And I've just seen too many bases be really messy with false starts and failed breaks when the relative strength is not there. And that's my concern with Robinhood.
Do we have a chart for Upstart? Do we have the UPST? I'm not sure if we do. That's the disaster of the day. Down 18% on guidance. Well, it was earnings but also weak guidance. So
this is buy now, pay never, right?
Nobody knows what Upstart does.
Oh, I thought it was one of the BNPLs.
No, I don't know. You know what it is? I think it's a fintech. It's like they do the back end for like some loans, but I really don't know. I'll be honest with you, I really don't know. But also this is a reference to Mark Minervini, who's asked about this on TV. Anyway, Airbnb also down this morning on their report. I think we have the Airbnb chart as well. EPS was all right, sales was all right, guidance was also there was a buyback, $6 billion buyback for Airbnb, but we're down a little bit this morning. What else is down? MGM is down on their earnings, Generac down on their earnings. What else jumps out to me? No, that's pretty much it. But there's a lot more tonight. We're still in earnings season. So
throw up the calendar quick. Let me take a look-see. What do we got? According to Spencer, my favorites are reporting later this week.
I don't know. I said some of your favorites, right? You got Coinbase is tomorrow. DraftKings is tomorrow.
I'm with you. I'm not saying you're wrong.
Yeah,
I love me some late night Wendy's.
I mean, CME Group. I feel like we like them. That they reported this morning. We had so some interesting names.
Baconator or Dave's Double, Spencer.
I haven't had a Wendy's in a very, very, very long time. I'll just say Frosty.
So I heard they have a strawberry Frosty now. Is that true?
Yeah.
I lived off Frosties for like 4 days when I got my wisdom teeth out. That's all I ate for 4 days was Frosties. It's great. But anyway, okay. Let's do we have a hot corner today? I saw one come through. Was it interesting? If not, we can bring Mary on. Okay, hot corner, and then
we have a hot corner every day,
my friend.
All right.
I
should have said
is so hot.
Is it interesting today? Is what I should have said.
So hot right now.
Yeah, let's do it. Let's talk about it. We got some stuff going on.
Hot corner. So hot right now.
All right, Strazza, Jana Partners, 37 million, but it's Jana Partners. So is 37 million a lot?
Yeah, it's fine. For sure. Problem here is not the amount, it's the chart. Just nasty downtrend for this one. And it's in a space, right? This is an industrial stock, Mercury. Aerospace and defense. A lot of good looking charts there. This is not one of them.
That's a good point.
And that's what we do. We pay attention to this stuff. We put it on the list. We keep it on the list. Maybe that trend changes. We could be involved in the future. But right now, as technicians, really nothing here for us in Mercury. Cousins Property stood out. These office REITs. Now, this is like, one of the most beat up areas of the market, right? Nobody wants to touch these office REIT stocks. So this one kind of stands out. Every time you pick up a newspaper, you see another horror story about commercial real estate. So Cousins Properties, CUZ, Principal Real Estate, boosting their stake with a Form 13 filing. This one's coming off the lower bounds too. Interesting. You like this setup?
No.
You like real estate at all?
No.
Nothing, huh?
I mean, some of the ones that like some of the ones that don't look like the rest of REITs, like the ones that are like weird, that are more like techy and industrially than the other REITs,
Yeah.
Yeah.
I'm not interested either. The one good looking chart here though is Everest Group, EG. So this one broke out of like a multi-year base, hit a price target, and this has kind of the makings of maybe a failed top or a non-top. It's kind of been consolidating here for over a year now. 2 directors, so spicy double, 2 Form 4s, combined amount of 426,000, and it's in a good group. I was looking back because we were doing the chart school stuff. I was looking back through old decks yesterday afternoon. I dropped a chart in the chat. This was from fall of 2022, pretty much at like the bear market lows, at least for the indexes, right? In late 2022. I think it was for the money show. I forget what it was for. And the 2 groups that I brought and showed the relative trends for was industrials, XLI SPY. As the market was bottoming, XLI SPY was completing a trend reversal, right, and breaking out. So we talk about it today as a leader. Back in Q4 of 2022, it was completing a primary trend reversal against the S&P 500, telling us, hey, we're going to be leaders. You'll be talking about us in 2024. You saw in the charts then. The other group that we spotlighted was insurance.
Well, what does that say about relative strength? Why we look at it, right?
It's a hell of a drug.
It is. Ooh, people are like, well, JC, price is what pays. Well, yeah, relative strength is literally price by definition.
Right? Yeah, listen, relative strength is the best stuff. It's the best stuff. Outside of price, it's so good.
Yeah, but it is price.
It's price. It's 2 prices.
It's 2 prices, right? Right, exactly.
Right. Yeah, it's some of the best tools that we have as technicians. Any other news? Anything fun? Can I do a thing here? I want to
bring on Mary. Bring on Mary.
Yeah. And I have a good question for JC. Can we do this now? Actually,
yeah, sure.
Okay. You see my hat? See my hat?
Sure.
Are you hodling enough? Should we be hodling?
I personally don't have enough crypto exposure, and I have a lot, but I think that I don't have enough. In fact, this is important. A couple of days ago, I was on the phone with Sean, and how we always talk about sleeping at night, and I have felt over the last week that I have a hard time sleeping at night because I'm not short enough.
Mm-hmm.
Right. So I like sleeping at night. So that's why we've been adding to shorts. I think that I'm going to have trouble sleeping at night because I don't have enough crypto exposure. That might be, I'm being perfectly honest. And I got a lot. So,
all right. No, I like this conversation. Yeah. This is good. Appreciate that. So we're showing all these divergences, right? And then we say, oh, but this one, crypto, has been moving higher with the large cap, stock indexes, right? So everything you're saying about stocks, you don't like them. But right now,
I have no issues with stocks. What do you mean I don't like them?
No, you want to be a net seller of stocks right now.
Have been.
Right. Good. Is that the same way we should proceed with crypto, right? Because usually the same playbook works for both.
This gets back to our first conversation.
What?
When something happens that you really didn't see happening, like the stock market is acting this way and crypto's acting a different way, like that's eye-opening to me. So this is new information as far as I'm concerned. Yeah.
Extra bullish for crypto. So the way to really think about this, you just mentioned, get that Bitcoin streak chart up. You just mentioned dollar, what's 7th week? We're working on the 7th straight week of gains for the US dollar index.
Right.
Is that right? During this streak of dollar strength, what if I told you Bitcoin is logging one of its best streaks of daily gains?
I wouldn't, you would have asked me that 7 weeks ago. I would have said not a shot in hell.
Yeah, bullshit. Right. So is the way to interpret this that, going back to our conversation with Jason, something's got to give for these cryptos? Or is it, well, goddamn, these things are ripping with a strong dollar. Imagine if the dollar were to cool off. What do cryptos look like then?
Yeah, from an intermarket standpoint, do we really want to overthink a tiny, irrelevant nothing of an asset that is cryptocurrencies, and it's 1.8 trillion? Which for cryptocurrencies is a lot, right? Like Spencer's like, I can't believe the Doge is 12 billion. Like for crypto, that's a lot. But in reality, they can all go to zero tomorrow and it won't matter. So do we want to overthink the intermarket analysis on crypto, or do we want to think the intermarket analysis on real assets?
Like this body.
I don't, another good discussion. You don't ever want to overthink intermarket analysis events.
Also true.
Right? The more overthinking you do with the intermarket analysis, that's one of those things that I think a lot of good analysts do to get themselves in trouble.
But if it was one divergence in the intermarket complex, that would be one thing. But it's been all of them.
Oh, yeah. It's stacking up for sure.
All right. Bring Mary on. I'm sick of seeing your face. I want to see hers. Mary in the house.
Hey, good morning. Happy birthday, JC.
Oh, thank you so much, Mary. Going to a basketball game with the wifey tonight.
That's what I heard. Have a great time.
Thank you.
Happy Valentine's Day, Spencer.
Likewise.
Thank you. Thank you.
You're dressed very, very festively for Valentine's Day.
Oh,
I feel like.
It's a warm sweater. I have to apologize.
It's a family affair, is it not, Mary? It's how you guys roll over there.
Yeah, it really is. Once you have kids, all holidays become all about the kids. So.
What are we buying, Mary?
Well, so, you guys talked about Hood, and this has been one that I've been watching for a long time. So I'd be curious. I hope Steve jumps back on here because he had something else he wanted to mention about this. But okay, so granted, only through the level 1 CMT, so maybe there's still a lot of stuff to learn. But when I look at this, I see a 2-year base. I see former resistance at that 1350. And, if we're above that 1350, why the heck wouldn't you be long?
Because the relative strength is making new all-time lows?
Compared to?
Any stock market index?
Okay, well, see, that's something that I'm not very familiar with. I just look at the chart and the price.
You asked why you wouldn't buy it. I think that's my answer. I'm not touching it.
No, that's fine.
And it's a valid answer.
That's what I want to know. And that's exactly what I want to learn is how else should I look at this? Because right now I'm looking at chart with a big base, obvious level of resistance. If we're above it, why not get long? And that's I guess maybe too much of a simplistic way of looking at it. So teach me as to how should I look at this better?
It's about putting it into context with everything else that's going on, right? Like you could be
Fair.
like, oh, whatever, the Michigan Wolverines won this weekend. Who did they play, the Chippewas, or did they play Ohio State, right?
Okay, that's fair. Okay, that makes sense.
How's that for a comparison?
I can relate to that comparison.
Yeah.
So for me, could this base work? And we look back, in a quarter or a few months, say, oh wow, look at Robinhood, it's at 20 now. What a nice base breakout. And by then the relative trend has broken out. Sure, that could happen. For me, it's all about stacking the odds as far in your favor as you can, right? And I know that my odds of being right and having a winning trade are higher when the relative trend is confirming the absolute trend. So Robinhood's so clean against these former highs, perfectly actionable here. The only problem is I don't have that confirmation in a uptrend on relative terms.
Okay.
Right? It's a sideways trend on relative terms. If that was in place, I would love this. And we talk about how we can't buy every pattern that looks like this because there's just too many, right? We have to have some way of kind of weeding out the ones that maybe we don't want to jump into versus the ones that we do. And I think the relative strength is really number one for helping you do that.
All right, that's good information. So thank you for that. Like I said, it's just been one that I've been watching, and with earnings happening last night and the reaction today, it looked kind of spicy to me. So thank you for explaining that.
I like it, and I agree with everything you're saying about the absolute trend. I just think, we want the relative strength.
Okay. So I brought another chart along with me. I was actually going to talk about this last week, but it still looks so great right now. And that's the path chart. And again, another really clean level there. We've at that 2250. I got involved as we took that out and retested or, kind of checked back in. And now we're up above that. If you anchor a VWAP from the IPO, we're trading right above that level. Had a nice little opportunity to get back in yesterday. It sold off about 7%, I think. And it's so clean, and it's a chart that I have really liked and I'm involved. So give it to me. Like, is this a good one or not a good one? Because I'm not doing that relative stuff.
Yeah. So if you look at path versus SPY, God, I wish I had the chart. We're right there.
Okay.
Right. So, on the absolute chart, we have the reversal pattern pretty much completed. And then we have a little consolidation. There's a little continuation pattern right above on the upper bounds of the reversal.
Okay.
This 2650 is probably the level for right here. When this goes, the relative trend breaks out. It's right there.
Okay. All right. So this is definitely a better option of the two ideas I brought along today.
Yeah. When we get off the show, go look at path relative to SPY and hood relative to SPY.
Okay. Will do. Yeah. So otherwise, I've just been kind of listening to you guys banter back and forth, fighting like cats and dogs.
How we doing?
Really, really great.
It's not fighting. It's just a discussion.
The chat gets so amped up about it. It's cute.
It's actually, you're like an old married couple. It's cute. You guys are
You
so
don't
fun.
listen. He doesn't listen.
Quite frankly, I mean, you guys are the reason that I got involved in the market, and it was because you took something that historically had been so boring and dull, and you made it entertaining, and you made it exciting, and I could understand what you were saying and follow along. And I mean, that's what makes you guys great.
I think it's important to have fun.
Yeah.
Thank you,
And
man.
I hope that maybe we teach that lesson to a lot of people. Listen, I do better when I'm having fun or enjoying myself.
Most people do.
Yeah.
That's why Strazza's dad says that back in the day he used to hog the ball a lot because he would have so much fun just taking so many shots he wouldn't pass. Is that true, Strazza?
I was really good at basketball. JC refuses to believe it.
I believe it. I believe it. I believe it.
No, but it's important to have fun. Like literally, if you hate your job, you're not going to excel at it, right? We're very lucky that we're out here doing something that we love every day. Maybe there's something there.
Yeah.
I don't know.
Speaking of fun, let's do some recess.
Please.
Woo.
What do you got, Mary?
All right, so maybe I'm showing my age here, but do you remember back in the day, Valentine's Day was just about going to the store, picking up the little box of 2x3-inch paper cards that had like Garfield and Snoopy and, the characters on them, and you put the kid's name on it and then you signed it and that was it. You put it in a little paper envelope. That was it. Kids these days, school these days, as a mom, like Pinterest has been the end of me because now everything is all about the extra bags and the treats and the goodies. And so I brought along a picture of my kids' Valentine's. And again, this is not anything compared to what
a flex.
Others.
Flex your Valentine's Day over.
Flex my Valentine's. So we've got bags of cookies with You're a Smart Cookie and ring pops with You're a Gem. And like, this will be the minimal type of things that come home from school today, because they will come home with a grocery bag of treats, and it's crazy. Like, everything now is just amped up a notch or 10, and everything is extra. And like, as a mom, I feel like you have to compete, because you don't want your kid to be the loser that's bringing just a little paper card that we used to get back in the day.
Oh, so this is what your kids are bringing to school
that's my
to give
rant.
away. This is what your kids are going to give away today.
Yep.
Oh my goodness gracious.
Yeah. So JC, it's coming. Your wife will be complaining here in a few years.
Well, my wife
she's
is actually
doing the Valentine's.
My wife is actually volunteering today for Valentine's Day. All the moms are always competing to do the volunteering. So finally, my wife gets the opportunity for about the Valentine's Day party. And yesterday, she was doing exactly this, creating little bags, filling them with pencils and little chocolates and all sorts of stuff. Yep, I saw it. Wild.
Wow.
It is really wild. So just a heads up for those of you without the kids, it just the pressure and the stress just keeps building in parenthood. Thank you, Pinterest.
Should I get a cheesesteak? It's my birthday, so my wife will do almost anything I want. Should I go to Jim's and get a cheesesteak? I love Jim's. That's my spot.
You can go anywhere. Go to Pat's, go to Gino's, Jim's, go to
Pat's and Gino's is for the tourists, Spencer. Come on, what is this? Come on.
Were you always this big a fan of cheesesteaks, or you really embraced the Pennsylvania culture?
You want to know something, and I'm still going to say this. I think the best cheesesteaks are in New York, actually. Which people do not like it when I say that, but I feel that way. The northeast corner of 46th and Park.
How do you remember?
There's a guy who's been there since the 90s. When I got to the street in 2003, he was already a legend when I got there. The guy's still there. Northeast corner, 46th and Park. You get Philly cheesesteak. You go white double hot, or hot double white. The white is just mayo, salt, pepper, and olive oil mixed together.
Thanks for the explanation. I was not following.
Yeah, the hot is like a standard New York City street cart thing. It's just olive oil, mayo, salt, and pepper. That's it.
They have like their own little language, like for ordering these things. Yeah. It's like when you order like a Cuban sandwich.
Wit or without, right?
What is that? Like,
That's a Philly thing.
Yeah, wit. You want a wit or without?
Wit whiz.
Yeah,
wit whiz.
That means cheese.
I'm more of a wit provolone guy.
You're provolone over the whiz.
Yes.
Me too, JC.
Give me the cheese whiz all day.
Provolone. It's a personal preference. I don't judge.
I do the cheese whiz.
I do think that cheesesteak on the northeast corner of Park Avenue and 46th Street. The guy's still there. He's in there with his Jerusalem Cruisers and this little guy who collects the cash. I'm telling you, that's the dude.
So not only does New York have better football team than Philly, but they also have better cheesesteaks. Wow, you can't give Philly anything.
Yeah, I don't know about that.
Yeah, all right. All right, that'll be a wrap for us today. It is 10 o'clock. Those of you in our Portfolio Accelerator program, we'll see you in an hour for the weekly meeting. Any questions, comments, concerns, email us. Email is on the screen. You can also call Mary as well for any questions about anything that we offer. The number is on the screen there. Thanks to our guest today, Jason Perz. Thanks to Mary. Thanks to you guys in the chat for hanging out. We appreciate all the comments, all the likes, all the love. That's it. We'll make some money. And, yeah, we'll see you guys tomorrow.
YOLO responsibly.
Wait, it's Wednesday. Hot Corner, 1 o'clock with Steve. Be there, and happy Valentine's Day, and happy birthday, JC.
Thank you, Spencer.
Bye.
I can't take no